Hi, good afternoon, everyone. Nice to see you again. I'm Amy Lei, a stock trainer at Home Lei Chat, which is a stock training school. And today's video is the 11th video of my channel, Amy Stock Analysis Daily. The topic today is why we miss the gloves. So I had mention of the gloves stocks. Then maybe a few people feel proud and happy because they have bought at a very low position and they keep holding maybe until now. So for them, they feel happy. But for majority of investors, I believe that we are really hurt. Our feelings get hurt by gloves stocks. Why? Because we have missed the opportunities. Okay, so why we miss the great opportunities provided by the gloves stocks? Okay, so I have made a summary here for you. Reasons we miss the gloves stocks. Firstly, one reason is we have missed the golden entry point, and then they are not buy when the price is already too high. So this might be the reason for many people who have missed the opportunities provided by by the glove stocks. Let's say, for example, we go back to the candlestick chart. Let's say top glove, right? Top glove. Okay, so top glove firstly caught our eyes maybe at this candle, January 21st, right? So January 21st, that's a very big rise. Six percent of rise. So at that moment, if we because we don't know what the future would look like for top glove, so we think it's already high, right? So we missed the opportunity to buy, let's say, at this position or even lower at this position. So, or maybe people would think this is also a very good one compared with the current price at this moment, right? But after we miss the golden entry points at relatively low position, we dare not buy. So we keep set lines to see whether or not the share would give us an opportunity to buy. And we see in between we have some corrections, but simply for some people they cannot catch this turning point, and so they still keep set lines, so they miss the opportunities all the time. So once we have missed the relatively low entry points, which are the golden entry points, we dare not buy when the price become higher and higher. The higher the price is, then the more fearsome we feel to buy, right? So let's say here, who dares to buy, especially after this long lower shadow? Who dares to buy this top glove, right? But still, we see after that the price keep going up. Although we have here a long bearish candle, but still the general trend should be okay. So after some correction, maybe, but I'm not saying for sure that this share still would continue going up in future, especially when when there is more and more concern about this reinfection of the COVID-19, right? So in a lot of countries, so maybe in future the gloves can even soar up to a higher position. But the truth is, we simply dare not buy because very high, too high for us to buy, right? We dare not. Okay, so this is the first reason why some people have missed the great opportunity of top glove. But for some others, there is another problem. The problem is maybe they have entered at a very entry point. Let's say here, they have entered at this turning point. Okay, 24th February. Then they have made some profit. Then when the price reached the previous high and even hit a new high, when they see this long bearish candle, so they become very frightened, and then they sell away. They buy, but then they sell. After they sell, some small correction, then the price continue going up and even saw up to a higher, far higher level. So they become regret. They regret what selling too early, right? So this is the second reason why we cannot catch the great opportunity. First reason, we miss the golden entry at the low position, and when the price saw up to a higher position, we dare not buy. The second reason, we sell too early. We may have bought, but we sell too early after a small rally maybe, but then dare not buy back. Okay, so the reason why we cannot buy at the golden entry point, or we cannot buy and hold until to the end, all because what? Because we cannot distinguish the potentiality of these shares. And in another way, maybe you are trying to do some very short-term speculation. You're trying to do some very short-term speculation, but actually, to tell you the truth, speculation is not a bad word. It's not a bad word. It's a neutral word. It doesn't mean good or bad. Speculation is actually a neutral word. It simply means we buy low and sell high, right? And if you have known technical analysis, you must have known that for technical analysis, it is in nature speculative. Actually, speculation is the nature of technical analysis. We buy low and sell high, right? But only that the masters, the real masters of technical analysis, what they have done is they have tried to offset the uncertainties and improve and pursue high probability. That's all the TA masters, what all the TA masters have done to offset the uncertainty and to pursue high probability. Because for technical analysis and fundamental analysis, the essential difference is for fundamental, a focus on the intrinsic value. So intrinsic value means it's more, you have more certainty. It's less uncertain, right? So you're focusing on the very long-term value, right? But for technical analysis, it focuses on the relationship between demand and supply. So then, naturally, you may be neglected the intrinsic value. So you have to, let's say, how to take more uncertainties. Because what? Because the relationship between demand and supply, it depends on a lot of factors, and the direct factor behind the relationship of supply and demand is people's expectation and confidence. And confidence and expectations, they can be affected by various factors. So means the relationship between demand and supply, they might change more frequently than the intrinsic value, right? So means fundamental analysis can be more stable, more long-term oriented, but for technical analysis, it has more uncertainties involved and relatively speaking shorter terms oriented. Okay, so that's the core or the essential difference between TA and FA. But why, considering TA has its own weaknesses, why still so many people are studying and pursuing technical analysis? Because technical analysis, the threshold is much more lower than fundamental analysis. If you really want to take advantage of FA, you really need to be an expert in a lot of things, ranging from the international economy and politics and the nation's economy, a certain nation's economy and politics, and let's say the performance or the outlook of this industry that the share you are trading belongs to, and also the company's performance, right? So you really need to study a lot of things. It's a very high threshold, but for technical analysis, the threshold is very low. You only need to be an expert in the chartings, and as long as you can set up your own trading system of high success rate, then you already can make profit and always lose very little, or sometimes don't lose at all. Sometimes you lose little money, but as long as there is opportunity, you can catch them. And if great opportunity, you make great amount. If small opportunity, you make small amount, right? So means technical analysis is a more practical way for majority of retail investors, right? Okay, so then let's go back to the gloves. We mentioned the reason why people and majority of investors miss the opportunity of these glove shares, because they have missed the golden entry point, and they then not chase after the rally, and for some they have sold too early and they're not buy back, right? So all the real reason behind the two mistakes is we don't know the potentiality of this share, right? So then how can we solve this problem? For the Homely software, do you still remember previously we mentioned one indicator that helps us catch or evaluate the potentiality of a certain share, right? Of the individual shares. Let's say for Top Glove, right? For Top Glove, at this moment, let's say 20th January, what we see is the price. Okay, what we see is for multicolor dragon, right? So this indicator helps us catch the traces of the big boys, the red bars, and the retailers, green bars, and also the speculators or the hot money, the yellow bars, right? So at this moment we see no retailer. Previously we still have a lot of retailers, but the retailers have all gone, right? Retailers already gone, and the yellow bars currently predominate. We have some small red bars, means the big boys, but just the small ones, right? Then we see this candle, right? So we see this long green candle accompanied by big boys increase sharply, right? And already more than 25, about to reach 50%. When you see this usually is the beginning of a rally, and we can monitor if in future the big boys can remain stably above 50%. Means this kind of share is quite bullish. You buy, you can hold for medium term or even to long term. We see the big boys increase. Then, although we have the price you see here give us a small correction, still we see the big boys remain around 50% and no retailers come out. When you see the price drop but no retailers come out, means this share is very strong. The big boys take control very well. Okay, some small green bars and big boys decreasing, but we see the green bars disappear very soon. For this kind of case also means in future still have great opportunity. Right. Then we see the big boys. Okay, so at least the big boys never drop below 25%. This also means the share is very strong, and in between the big boys might drop to a relatively lower level, but the other factor is the retailers, they never after they appear never increase and more than 25%. Okay, this is 25%, just several days then disappear quickly. So this also means the uptrend is very healthy and the upward momentum is very strong. The big boys take full control. And see, as long you see here, the big boys already reached 75% and very stable above 50%. This really means it's the rally would be even bigger after that. Then you see the big rally come, the bigger rally come, right? So this is why it can be so crazy, because the big boys already almost 100%. No wonder it can be so crazy, right? Okay, so this is how we know the potentiality, by checking the multicolor dragon. After you have checked the multicolor dragon, and if you have bought at the right position, you can keep holding, because you know this is a share of great opportunity, right? So when exactly do we buy, we need an entry point, right? Don't forget our homely rainbow, right? So for homely rainbow, it tells us the trend for long term, for medium term, for short term. And let's go back. At this moment, you still remember here, right? So we see this is the beginning of the rally, right? And 21st January, and we see before that the white lines of homely rainbow down, means for long term bearish, and the price below, every time the price touch the rainbow lines, the white lines, the blue lines, the yellow lines, it would be a resistance, strong resistance, and the first attempt for the price to break up the resistance of the white rainbow, and then pull back to test whether the breakthrough is effective. And as a matter of fact, the support levels at the white rainbow, the yellow rainbow, and blue rainbow, it holds up. So then the price back above the white rainbow again. And when you see this, Actually, this candle which is 15th January. When you see this candle, it's already a confirmation. Actually, the support here provided by the rainbow lines strong enough. So this actually already is the beginning of a rally, especially when we see the big boys suddenly increase, right? And then for short term, still there might be some risks because this is a very long green candle. After that, the price may drop first in near future. So what we can do is check the half level of the this long green bar. So I can try to buy the following day. As long as the price remain above the half level, I stay. I keep holding. If it drop below, I come out. I leave first, and then in future, if the price above the half level of this candle again, I can buy back. Okay, so this day closing price below, so maybe you never have to buy because you see during the trading slot the price already below, so you can wait. Yeah, this day you can buy. This is the entry point because the price above half level. So see, we just enter at the best entry point. So you see, after this already confirmed, the price is reversed from long-term bearish to bullish. So we buy at the golden entry point. So after we buy, we see the big boys remain stably around 50, what we have mentioned just now. So you buy, after you buy, you can hold all the time. If you feel that this share is really of great potentiality in future, because the big boys, they can reach even 75 and stably above 50% for a while. After when there is a correction, no retailers or very little retailers which appear and disappear very soon, means this share is still very strong. And on the other hand, we check the support at the yellow rainbow line, quite strong. So when you see the price stop dropping further at the support of the yellow rainbow lines, you even can increase your position. Okay. So you buy, you increase your position. So every time drop to the yellow rainbow lines support, you can increase position again. Okay, see, after that, then you keep holding all the time. Okay, so by checking multicolor dragon, you will never try to sell. Maybe let's say I did during this period, when for very short time, the price already sold up to a high level. You think it's high enough, but after this big rally, this is nothing, right? So high or low, that's a relative concept. You need to have your own concrete, clear standard, right? How high is high? Or let's say whether or not the price is already at the top, the very big top. So by checking the performance of multicolor dragon, you can know this share still very strong. Big boys very strong. So no need to fear that the price is already very high. Okay, still until now, up until now. So big boys stably above 75%. That's very crazy, right? So in future, you still can hold all the time. And as long as the price remain above the yellow rainbow here, for medium term, it's very healthy uptrend. Okay, and let's say, what if you have missed the golden entry point, right? For some people, they have missed the golden entry point after the corrections. All the support at the yellow rainbow lines is the perfect entry point. See, perfect entry point. Okay, so you miss this opportunity to buy, can buy here, and buy here. But how about now? For now, because the correction for short term is not so big, so better we wait until the price maybe in future give us a bigger correction to touch the yellow rainbow, then maybe turn upward again. That's another entry point. But considering currently the price is already high, very high, right? So even if you buy next time at the support of the yellow rainbow, you better trade for short term first, because now it's already your cost is already very high. Okay, so this is how we can evaluate the potentiality of the shares, and also how we can buy at a golden entry point, and how we can buy after some correction if you have missed the golden entry point. This is already a very good trading system with high success rate. So you can check all the gloves shares. This is the top gloves for Malaysia, and how about top glove for Singapore, BVA, right? So see, all the same. Previously, price below the white rainbow lines means long-term bearish. This is the moment the price above the white rainbow lines means the beginning of the reversal. So we also see the big boys suddenly increase to 25 and then to 50%, more than 50%. So your entry point here. Okay, this is your entry point. After that, we have some correction. Then you see the correction, it touched the yellow rainbow, stop dropping further. And here we see for Singapore top glove, it's a bit weaker than the Malaysia one, because the retailers increased to 25%, roughly around 25%, right? But if this situation continue and the price drop below the yellow rainbow, that's when we need a clear position. Okay, but we see the price never drop below the yellow rainbow, so you still can wait and see. But as long as the retailers are there, the big boys cannot remain stably above 50%. We know this share has no great opportunity, maybe some small opportunity, but the price cannot soar up very fast, right? Only when the big boys can remain stably above 50%, then can the price soar up very fast. Okay, so here, this candle, we see the big boys more than 50% again. This might be the beginning of another rally, especially we see this is the previous high, and the price is about to break up the previous high level, the platform, right? And then, okay, this is the real moment when the price break up the platform, and also we see the retailers disappear completely, and big boys, you see, for this period above 50% most of the times, means quite stable above 50%. This is confirmed. This is a very clear signal. This is the beginning of a rally. This candle, that's a tentative buy point, but this is already a confirmed one. See? After that, the biggest rally, right? So you missed here, you can buy here based on multicolor dragon and also the rainbow lines, especially the yellow rainbow, right? So this is a very good trading model, and you can check some other, let's say 5168, another Malaysia share. See, it's the same price above the white rainbow lines, and this one, all the rainbow lines are already gathered together here. This pattern is very beautiful here, right? And then once the big boys appear and can increase stably. That's the beginning of the rally. So here, big boys firstly appear a bit, but not stable, disappear again. So here, this is the beginning of a rally, right? So after that, as long as the price remain above the yellow rainbow lines, we keep holding. So here, correction, this seems quite terrible, right? Fearsome, but still above the yellow rainbow, so no need to worry. And even after the big correction, no retailers come out, means the big boys still control the price very well, still take control, so no need to worry, just follow indicator, right? If you have missed the opportunity to buy here, you can increase position here or here. Price gets support at the yellow rainbow again, and as long as the big boys remain stably above 50%, I will not worry that it's too high and the drop is coming soon. Okay, so that's it. So in summary, in conclusion, the reason we have missed glove stocks because we missed the golden entry point and then now to buy when the price is already too high. But how high is high? We feel it's high, but is it really that high? Right, so that's why we need a software, because the software give you a very objective standard. It's a very objective standard that if you follow, your success rate can be high. And don't forget, Homely software, the success rate is 87.4%. Okay, and then second reason is we buy and sell soon after making small profit, and then they are not a buyback. That's also another reason. And why we have made such mistakes, because we cannot know the potentiality of a share, and we don't have our own trading system of high success rates. So we feel that we are gambling. And actually, about gambling, some people think that gambling is the same thing as speculation, but today I already told you, speculation is a neutral word. It's a neutral word. It doesn't mean good or bad. Speculation means buy low and sell high. You just trade based on the relationship between demand and supply. Okay? And so for the masters of technical analysis, they always can offset the uncertainty as much as possible and always pursue high success rate, high probability rate. And how we can do that? You only need to set up your own trading system of high probability. Just now I have shared with you a trading system of high probability, which is multicolored dragon and homely rainbow. Multicolored dragon to help you evaluate the potentiality of this share so that you know how long you can hold after you buy. And homely rainbow is to help you distinguish the long-term bullish reversal and tell you the significant support. And after you have missed the golden entry point, the golden entry point is the long-term reversal one, right? When the price above the yellow rainbow. And then don't forget to combine with the multicolored dragon. We need energy, need the big boys, right? And then if you have missed the golden entry points, you also can enter when the price drop to touch the yellow rainbow, get support, still can buy. In this method, you will never miss the opportunity. When you have you miss the you will never after that you can catch the opportunity when you have already missed the golden entry points, because you know where to buy again, and you know for sure it's of great potentiality in future, right? And also you can avoid selling too soon after you make some small profit, because by checking multicolored dragon, you already know it's of great potentiality. Then you buy, you hold, right? Okay, So that's all for today, and the next video will be tomorrow afternoon around 4 p.m. and see you tomorrow. Bye bye.